Welcome to the Morningstar Manager Checkup, where this week I'll be covering 3 new funds we've recently added to our coverage. Starting with Artemis Global Select, run by Simon Elliston, Alex Illingworth and Rosanna Bocelli. They've got a global equities background and been together since 2011 when the fund was launched. The starting point is identifying long-term growth trends, which gives a steer to industries they'll favour. They then look for quality companies trading at attractive valuations, have sustainable cash flows and high barriers to entry. This means there's relatively low exposure to more cyclical parts of the market. The process and thoughtful portfolio construction will likely see returns holding up well in challenging conditions, while just about keeping up in rising markets. So in terms of generating compelling risk-adjusted performance, we've a positive view and the fund has a bronze rating. Next up is the Pyrford Global Total Return Fund. The emphasis here is stable real returns and to avoid losing money in any 12-month period. We see this as a strong choice for investors who also want exposure to a transparent and understandable portfolio. The fund's only invested in equities, highly rated government bonds and cash, nothing else. The team then uses 4 main levers: asset allocation, stock selection, bond duration and currency positioning. The objective has been met in recent years, even though they've been bearish on government bonds, with over half the portfolio held in very short-term debt, so pretty much cash. Overall, we like the strategy with a stable team throughout its existence and fees are competitive. The fund's therefore awarded a Morningstar Analyst rating of Silver. Finally, the AXA WF Global High Yield Bond Funds, which has been managed by Carl Whitbeg and James Gledhill since September 2012. Whitbeg leads on US High Yield, while Gledhill manages the European exposure, and they're backed by a dedicated team of analysts. They typically hold a core of shorter dated high yield bonds. This is to mitigate against volatility from higher risk issuers, where they've generally held an overweight to triple Cs. In terms of sector exposure, this tends to reflect the team's preference for companies with stable business models and predictable cash flows. It's worth noting that in the high yield space, high transaction costs aren't captured in the index, so we take this into account as part of our assessment. We're confident in the team's ability to effectively execute the process and add value over a full market cycle on a risk-adjusted basis. We've therefore initiated coverage with a Morningstar Analyst rating of Bronze.